dan saya akan teruskan perbincangan seterusnya dalam segmen Niaga AWANI Forecast, di mana equity crowdfunding ECF is an innovative form of alternative fundraising that allows small businesses to raise capital from the public using online platforms registered with the Securities Commission Malaysia. It allows small businesses to offer equity in their companies to investors who in turn invest in the concept which they see potential in. Through ECF, investors can diversify their investments beyond traditional asset classes. Malaysian ECF platforms have been charting impressive growth since 2016 in line with the government's call for financial services providers to embrace technology and develop more inclusive, innovative and efficient capital markets. Although ECF funding had skidded during the initial stages of movement restrictions in 2020 amid the economic slowdown, it had eventually bounced back following subsequent relaxations. And since its inception, ECF had helped raise 560.4 million ringgit of funds for 305 issuers via 330 campaigns as at end December last year. So joining me on the line is Xelia Tong, the Chief Operating Officer pitchIN. Good morning, Xelia.
Hi, morning, Nabila.
All right, perhaps to start, can you share on how has Malaysia's equity crowdfunding transformed fundraising for small businesses since inception?
So I think, like you mentioned, equity crowdfunding, when it first started in 2016, a lot of the efforts by the platform operators that were given the license was really in terms of educating the market, right? But to date, in 2023, investors are actually a lot more familiar in terms of what equity crowdfunding is, whereby people like you and me or people on the street, retail investors, are now able to actually invest into businesses that they may have interaction with, right? So like you mentioned, out of the 500 over million the ECF has actually helped SMEs as well as startups to raise over the period of the ECF platform being available in the country. At least 3/5 of that number, pitchIN has actually contributed really very strongly in helping up to about 170 of those companies to raise funding. Perhaps these are actually companies that may not have been able to actually access the traditional financial institution for funding. Equity crowdfunding is actually a really good alternative platform for them to raise the needed capital for them to grow the business. So I think overall, I think one of the biggest changes is that retail investors can now participate to invest and take ownership into businesses that they have actually dealt with. Regulations is actually relaxed in a way whereby we now can actually, for issuers, right, you can actually raise higher amount of money, up to 20 million in the lifetime of the business, right? And investors right now, they can actually participate in a lot more different kind of businesses, including things which are like, say, Sharia compliant or even ESG, which is something that's like a hot topic this time. So I think I would have to say that, you know, even though it's only about 8 years, I believe we have actually come a really long way in terms of helping businesses, as well as also in terms of helping investors to accept an alternative asset class in terms of their investment portfolio.
All right, Xelia, you touched about ESG earlier, but we'll get into that later on upcoming questions. But for now, what trends have emerged in the Malaysian equity crowdfunding market over the past year, and how these trends impact the overall attractiveness of crowdfunding as an investment avenue?
Okay, what we are seeing right now is that one of the things that is happening is that with the investment market, one of the positive things that's been happening is that we see venture capital taking an interest into deals that are actually being raised on equity crowdfunding platform. This was actually not present probably in the last 2 to 3 years before, but then over in 2023. We are sort of getting a little bit more stronger interest in terms from the venture capital who wants to now also broaden their reach in terms of deals that usually don't go to them, but are actually good deals for them to actually take a look at to invest. The other thing that we have also seen is that actually there is also a stronger interest in terms of, say, Sharia compliant sort of deals, right? And the Sharia compliant kind of deals, like for instance on pitchIN, I think one of the deals that we have actually put up called Apping Technology, it was actually sort of oversubscribed by more than 1,000%, and that was actually like to us is actually like a really great achievement for pitchIN, right? So Sharia compliant Sharia compliant issuers are actually things that we see a lot more interest coming up from our investors. We actually see a broadening in terms of like the investors who are actually happy to look into equity crowdfunding as an alternative investment in their portfolio, like I mentioned. But the focus in 2023 is still whereby we want to be responsible platform, right? Whereby we want to also be ensuring that like any of the deals that's actually put onto the platform, valuations, sustainable business model, all of these things are also present. So our due diligence is actually very compact to ensure that the deals that we actually put forward for the investors on our platform to see are actually good deals that they can actually look at and actually, sort of put in some money to actually invest into. The other trends that we're also seeing in terms of 2023 is that on the regulation side of things, Securities Commission is also, very collaborative with the equity crowdfunding players, or in short, all the registered market operators, whereby we are actually looking at how we can ensure there is flexibility, but at the same time ensuring that investors' protection is always there. So things like ensuring that there's better due diligence being conducted, more transparent reporting by issuers who have actually raised funds on equity crowdfunding, ensuring that we use a lot more in terms of technology, sort of like data analytics and everything, all to provide, like, say, a better choices or filtering for our investors to actually look at in terms of the kind of deals that may be of interest into them, right? So these are actually some of the key trends that we have actually seen in 2023, and we do believe 2024 positively, all of these changes will also continue to grow. And I think we want to sort of salute in terms of the regulators who have been actually working very closely with ECF players to ensure that we will be a really good alternative platform for SMEs as well as startups to actually raise funding, as well as also for investors to actually look at like what are the kind of deals that they usually don't get access to, which only, like, say, the more established investors will actually get access into. So I think these are some of the things that we have seen in 2023. And we're also excited for 2024 because I think one of the things that investors want when they do investments is actually in terms of liquidity, or in short, what we call it exit plans, right? So I think one of the things that everybody in the market is actually keeping an eye on is the secondary market that pitchIN will actually be launching in 2024. So I think on the growth trajectory side, we do foresee 2024 to be actually a really bright year.
All right, so given the contemporary emphasis on environmental, social and governance, ESG, you mentioned earlier, the principles across corporate landscape, does ECF Malaysia actively incorporate and prioritize ESG consideration in its operation and also investments? What do you think about that?
So yes, ESG is a really hot topic, right? Among corporates, among like investors, and for the ECF guys, it's also not something that we are not aware of, right? So I think some of the things that we are currently working on is that I think on the platform side, we are probably looking at more sort of curated campaigns, right? We are not going to specialize in it, but we probably can curate campaigns with a lot of people who are doing badging in terms of like ensuring that these are actually ESG compliant, or those businesses that has got ESG commitments, right, in their business, and we can showcase that to our investors. As part of the due diligence as well, I think we also need to ensure that a lot of businesses who claim they are in ESG compliant, but then we want to sort of avoid what we call greenwashing, right? So I think we, on our side, I think we are responsible also to ensure that when we do a due diligence, some of these things we will incorporate into our processes to ensure we also evaluate that segment of the business. Thirdly, I think on the platform side, plus also alluded by, encouraged by the regulators, is actually on, say, looking at are we able to sort of facilitate in terms of impact reporting, right? So for us at our end, we can potentially encourage our issuers to report, because this will actually elevate or give them better credibility in terms of their campaign page when they actually want to sort of attract investors who are interested in this space. So I think fourth is also in terms on the investor side, right? I think we probably also need to educate investors in some of the programs that pitchIN is actually very, very active in actually running, like our accelerators as well as our investors workshop, right? To actually educate investors in terms of what are the ESG factors and what are the potential impact on the returns that they're actually looking at, right? So that then they can actually make a better and sound decision, right? I think thirdly, I think in our regulation side of things, I think the encouragement as well as hopefully we can see maybe some incentive that the regulators may consider introducing to the ECF platforms that actually features issuers that actually focus on the ESG side. However, having said all of these things that we can do and we can hope for, there are certain also sort of like challenges, right? I think not just for us, but for many other corporates or the other investors out there, the availability of data as well as also standardization in terms of ESG reporting is somewhat still a little bit complex, and many of us are probably like still in the dark in terms of like what would be the right kind of format of the reporting, or what are the standardized versions that we can actually put up there. So it is something that we will work hand in hand with the regulators as issuers to ensure that, you know, we put in sound reports if we were to sort of issue that out, right? And again, like I mentioned, the other challenge is also to ensure that the kind of deals that we put on and we claim that they are ESG compliant, or issuers represent their ESG compliance, there is no greenwashing in it, right? So I think it is very important in our due diligence as well as our transparency in reporting. It has to be able to capture that. So I think on the ESG front, it is something that's growing. There is a lot of emphasis on that. But we also need to ensure that, you know, we are transparent and we are proper in actually ensuring those reporting is being done.
All right, there was Xelia Tong, the Chief Operating Officer of pitchIN, and thank you for the insightful discussion. And surely we hope to always make it easy for startups to find the funding they need to grow and succeed. And we believe that capital should be accessible to everyone, and we're committed to helping entrepreneurs from all backgrounds. And you can find the full discussion on all of our digital platforms.